What is going on, everybody? My name is Baloo and welcome to the jungle. This is the channel where we take a very simple approach to technical analysis. We look at the price in the context of volume using the Wyckoff method. If that is something that interests you, then why don't you hit the subscribe button or give me a follow if you're following along on Twitch. And in today's video, I want to talk about the launch of the CME futures on Ethereum. A lot of people are freaking out just because of the fact that when CME was launched for Bitcoin, that was pretty much the catalyst to add a lot of selling pressure that pretty much ended the bull market as far as the 2017 crypto bull market run. Pretty much since their launch, it was a long drawn out multi-year bear market. So a lot of people are speculating that a similar outcome could occur. So I kind of want to just take a zoomed out a look at some of these charts, kind of make a comparison of what the market looked like back then compared to what the market looks like now, and try and see if we can kind of prepare ourselves for many different outcomes, because I personally do not think that the market is in a similar condition as what it was when the Bitcoin futures were launched. So without any further ado, let's go ahead and jump in to the charts here. Let me just get that on full screen. We will start things off on Ethereum. We want to just take a look at the health of Ethereum right now and just kind of see what we can get. Oops. No, Siri. I don't want to talk to you, Siri. I'm in the middle of a stream right now. So we are inside of this ascending channel. You know what? I think I have a different chart for Ethereum. No, that's the chart. Okay. So we are inside of this ascending channel on Ethereum. And we've just been, we've been testing supply on the support levels, and we've been testing resistance up at the top of the channel. We did get a break of this kind of ascending triangle formation, and we met some supply as we tried to do a successful backup on here, but we were unable to do so. We needed to come down and test lower levels. So looks like we got a little bit of a wick down here. Little bit of a supply signature came in to defend that area. I'm not seeing anything crazy volatile as far as, I'm not seeing a ton of supply come in at these levels. So there is selling occurring. We are at an all-time high. So, there's selling. There's always going to be selling when you're trying to break through an all-time high break. So we are seeing some of the price action reflect that. However, I'm not seeing the institutional amount of selling indicated by the volume. If there was a ton of selling pressure coming in, this volume would not be contracting. So if we go ahead and just grab our, I'll just grab a drawing here and just kind of show you what it is that I'm talking about. The overall volume is declining. So it's a contraction of the supply. There's less and less activity happening. Composite man, as it were, in Wyckoff is not present in the price action right now. Now, Ethereum futures are launching tomorrow. And there is a ton of speculation that what Bitcoin futures did to Bitcoin, we're going to see something similar in terms of Ethereum. And I don't like to speculate on past events too much. I don't like to make those comparisons in terms of what we have seen in the show. What that means is if everybody is calling for one outcome, chances are that outcome is priced in. And I feel that we're in a very different place than where we were at the 2017 bull market high, just because of the fact that the price structure and where we are in the market is very different. So before I go into any more of the charts right now, let's go ahead and take a look at Bitcoin in 2017. So I'll pull up the Bitcoin chart. Let's do the BLX. And let's go way back to this 2017 high. We'll throw our replay on here. And I believe it was December 20th or something along that line. So what do we got here? Yeah, it was about the I think it was the 20th. If somebody in the chat doesn't mind doing a check on that for me, just to find the exact date where Bitcoin futures was launched, that would be good. Where is, oh, I zoomed right past it. Way past it, okay. What is going on here? Okay, there we go. We'll just call it somewhere around there. 27th, why not? I'm just gonna go with the 20th. Okay, so here is what the market looked like back in 2017. Now, a couple things to highlight here. This was quite an extraordinary run, first of all. You know, if this was the previous cycle, you know, we are certainly not looking at stuff like this. Look at this chart. This was the previous cycle. December 17, close enough. We'll call it good. Actually, is that the bar I landed on? 21st, somewhere around there. It was December 17th. Anyways, here's our previous cycle. Here is basically where we are now. You know, you can speculate. You know, you could say we're here. You could say we're here. But we're in this move of this cycle. Now, that's not the only thing that I just want to compare. That's not the only thing that I want to talk about. I'm not just speculating on space and structure. What I am speculating on was the attitude of Wall Street and the attitude of traditional finance at the time. Traditional finance missed the boat on this run. They were upset that they didn't see it, or they just saw the incredible meteoric growth of Bitcoin in the crypto space, and they were upset that they didn't have the financial tools that they were used to be able to, you know, capitalize on such a volatile and, you know, liquid market with a ton of fresh meat in the market. The crypto space at the time was so ripe for, you know, Wall Street getting in there and doing their forms of manipulation. Retail investor, or as they call them, dumb money, you know, anybody who was in this market at the time of 2017, with all due respect to everybody, myself included, we were dumb money. And Wall Street found a way to capitalize on that, and it was through shorting. They probably pumped the price up. They probably, you know, bought a ton on the way up, knowing that these futures were going to launch. So they were accumulating ridiculous, you know, all the way up, just so that they could dump it on leveraged contracts for futures. That was the only way that they could capitalize on what was happening here. That was the only way that they could really get in on the action, per se. You know, this is, you know, what I'm speculating on, but this is what I believe. I think that they missed it, and then they were upset about it. They didn't listen to anybody. They laughed at Bitcoin. And then when it started to really take off and show people that, you know, maybe this is a technology worth paying attention to, they were upset that they didn't have exposure to it. So they wanted to get downside exposure. Now, this cycle is very different. I think that, well, I know the institutions are involved this cycle. And don't ever fall into the trap of this time is different, because those are very costly words to tell yourself. But I think that in the terms of Ethereum futures, I think that they're positioned for upside in Ethereum. I think that the price of Ethereum has been suppressed, and that's just based on the price structure that I'm seeing in the charts. If we go ahead and take a look at the Ethereum chart, let me go to a spot chart here, and let me just clean it up here. So, we're just breaking the all-time high here on Ethereum. With Bitcoin, we're well past the all-time high. Well past the all-time high. We're at least twice past, twice the distance from the all-time high. We're at 40,000, the all-time high was 20,000. And then when you look at Ethereum, we're just at the all-time high. So structurally speaking, it hasn't been performing as well. And I don't think that that is on accident. I try not to get too conspiratorial, too much conspiracy theory and stuff like that. But if there were whispers on Wall Street of CME futures coming to Ethereum, I would speculate that, there would be forces at play trying to suppress the natural value of Ethereum until those futures contracts were available. And then they would purchase those long contracts and then release whatever, suppressive pressures were on Ethereum to then naturally allow that price to reach the value that it should be. Look at the DeFi space. All of the DeFi space, 90% of the projects on DeFi, building to this decentralized world of finance, are built on the Ethereum network. Ethereum is the most widely used smart contract program in the space, and its price appreciation has not seen what it has deserved. You look at Aave, you look at Compound, you look at Uniswap, you look at SushiSwap, you look at all of these projects that are building on Ethereum that have seen meteoric rises, yet the platform that they're built on has seen not much. Really nothing, honestly. I think that, there are forces at play that are contributing to that lack of performance. And I would not be surprised, tomorrow there may be a dump. And what that dump looks like, I have no idea. But I do think that it's going to be short-lived. Thanks, Ling J, for the follow there. I do think that it's going to be short-lived, and I think that this is going to be the catalyst. I do think that financial players are positioning themselves. They might be doing whatever. They may have purchased a ton of Ethereum through the accumulation phase, and they're just selling when they need to suppress it. And we're seeing that here. The all-time high break. We had a nice break, and then it didn't have a good follow-through. So, I really do try not to just call manipulation. But this is a rather small marketplace that does have big players in it now. And I think that there are some big players that are wanting to get positioned appropriately for the launch of futures. So anyways, that is kind of my speculative analysis. And again, it's very speculative analysis, but I do think that things are different here. Everybody expected when back in 2017, when the Bitcoin futures were launched, that we would pump. The reason we thought that we would pump is because there was a narrative, wait for institutions to get involved. And so we were waiting for institutions to get involved. And then when they did, we got really, really excited. Little did we know that they had plans to short and plans to really pop the bubble. But now they're in, and now they're on the other side. So that's kind of my thought on Ethereum, and that's kind of how I am justifying the bullishness of the charts. I think that the charts look great. I love the charts in Ethereum. I think that this is really good structure, really tight consolidation. We're making higher highs, we're making higher lows. We're not seeing a ton of supply. There's no institutional selling here. And when we take a look at the Ethereum Bitcoin pair, now, I typically don't look at this too much when I'm doing my trading, but as far as market health and a comparison, you can see the suppression when you compare Ethereum to Bitcoin. It had a bear market just like Bitcoin, and then it did nothing, and it's continued to do nothing. But this is a floor. We're seeing a bottoming pattern here. This is a floor, and we have our macro low here. We have our macro low. We have a lower low, and then we have our first higher low. So that's a trend change. We have our first macro lower low, and that is coming on high, higher high, higher high. The trend is changing when you compare it against Bitcoin. I keep analysis fairly simple when I'm doing the currency pairs, the Bitcoin Ethereum pairs, any asset compared to Ethereum. I keep the analysis really simple because since the introduction of derivatives and other financial instruments that are using leverage, US dollar is kind of those are the charts that most people are looking at. So my trading setups and stuff do happen on the US dollar pair, but we are starting to see this this momentum build in Ethereum when compared to Bitcoin. So I think there's a little bit of a rotation of funds occurring, and I think that where this futures launch, I think it's just going to be a minor blip in the grander scheme of what's going on here. So I'm going to look at a few other charts. If there are some charts that you would like me to take a look at, that's basically it. That's my thoughts on Ethereum and Ethereum futures. I think that it's going to be a minor event, a little blip, and I think that it's actually going to fuel the frenzy into this space. But yeah, so those are my thoughts. That is my sentiment. Taking the contrarian approach, I just don't buy into all of these people saying that, this is going to pop the bubble. This is going to be the end of the market. So let's take a look at some of these other charts here. One that I've really started to get quite bullish on is the graph. Yeah, 2018, December 18th was the, but yeah, so I for those who are signed up to the Arcane Bear newsletter, you got this newsletter today where I did a breakdown on the graph GRT, and I really like the structure that I am seeing inside of GRT. I think that we're making a really solid higher high, higher low structure, kind of a cup and handle formation. Every time you hit the like button, a crypto gets its wings. Yeah, so we're seeing higher high, higher low structure. We're kind of in this ascending channel inside of GRT. I kind of got to stop talking so serious now. I'm out of the speculation on Wall Street mode, and it's time to get back into the bullish setups. So yeah, I'm seeing this on GRT. I think we're in a backup phase right here. So this area right here, it looks to be our backup.
I didn't get that.
Siri, leave me alone. I'm in the middle of a stream. How do I disable you?
I'm not sure I understand.
It's okay. We have to see other people. Anyways. Yeah, so I think we're in the backup phase right here. And, man, that's messy. Back up. Backup phase. Right here. And so, don't be surprised to see another move down and kind of test this upper end of the buyer's climax right here. So, tomorrow's event may cause a little bit of a shakeout in the market. So yeah, again, don't be surprised to test some of these lower levels. We may even test down to this LPS, last point of support, right here before, gaining enough momentum. But as you can see in the volume here, contraction of the supply overall. It's looking really good. Volume is declining while price is increasing at a very good rate. The price is, this ascending channel is a beautiful channel to be in right now. I think that, ascending channels are very favorable trading environments because, when you do get to the bottom of the channel, clearly when the price structure is broken if we break the channel. So if you have the opportunity to get down here or here and you're riding this channel, if we do break structure here, you've got a lot of time. You might even, see that the structure is broken and exit the position and profit. So ascending channels are very favorable trading environments, and I like them. We've seen quite a few ascending channels pop up in some assets such as Chainlink, and I can't remember off the top of my head here. But yeah, I do like ascending channels. Yes, there are lots of sexy ascending channels. Okay, Noodle Official. this might be simple thinking, but with institutional whales buying so much, they would have done so with expectations that ETH futures not impacting the price negatively. I agree. I think that the institutions know what's going on. I think that there are people that really understand where crypto is going. And it's in the name, guys. Futures. You're placing bets, basically. You're placing bets on the future performance of an asset. Whoever is betting against Ethereum, the most used decentralized smart contract platform in the space that has been underperforming compared to all these other parabolic rises in these DeFi crypto assets, that's a short-term bet. That is a short-term bet. I don't think that is a long bet. I think if you are going to hold a contract for a long amount of time, it's going to be to the long side, because I truly believe that we have a lot of price appreciation ahead of us, and I'm pretty sure that smart and savvy investors are holding to be on the receiving end of that. So yeah, that's what I'm seeing inside of GRT. Another one that I wanted to take a look at is Flamingo. I like what's going on with Flamingo. So speaking of smart contract platforms, Flamingo is a decentralized exchange that is on the Neo protocol, the Neo platform. And we're seeing a similar sort of structure occur inside of Flamingo, meaning, we're not so much of an ascending channel, but we're seeing a double bottom formation, and we're just starting to make higher highs and higher lows. So that is very nice price structure. I keep it really simple. For those who are new, you'll notice that I don't use much in terms of moving averages. I don't use MACD crosses. I don't use much to tell me where the buy signals are or where the sell signals are. I simply look at price structure, and this is what this methodology is known as the Wyckoff method, and it was invented way back in the back in the early 1920s by a stock operator by the name of Richard D. Wyckoff. One of the original forms of analysis that still holds true today, because most TA is just interpreting human emotion and the accumulation methods of the composite operator. So Flamingo, we're making higher highs, higher lows. We do have this break of this previous resistance, and we're now holding it as support. And I'm just liking the structure inside of Flamingo. So I think that, this is obviously not financial advice, but this is looking like a good place to be in. There was a lot of supply that came in here on our first attempt to break this line of resistance. So that is going to take the form of absorption. So you can see here, we have this increase of supply, increase in supply, increase in supply, until this climactic action of the supply that was the first initial break of this line of resistance. And then the supply fell off, and we're now at lower levels than where we were before that supply absorption. And we're at lower levels with a successful break of that resistance, and we're now testing that line of resistance. So it's looking as though the supply that was entering the market has been absorbed, and there are not very many sellers. The sellers are exhausted, and when the sellers are exhausted and the demand is present, price appreciation or markup is what can be expected next. So I'm really liking where we're at in Flamingo, and I like the way that I am positioned in Flamingo. I just went through GRT, so if you're late to the stream, that is okay. I will be, you can watch the replay on this one. I just went through GRT. Also, if you are not signed up to the Arcane Bears newsletter, I write a weekly newsletter for the Arcane Bear, and this week's newsletter was GRT. So if you like those types of projects and other projects that other projects that I'm interested in and he's interested in, we do a weekly bear forage. We kind of dig up these gems that are fundamentally strong but also technically strong, because the technicals need to be there for the fundamentals to really perform. So sign up for the free newsletter. The replay will not be on TradingView. No, it'll be on YouTube. If you don't want to stay live with us right now, you could just go back. What else do we want to take a look at? So what else was it? Was it GRT? I feel like somebody else asked me something else. I'll take a look at REEF. Yeah, oh, MATIC. MATIC was the one I saw, but I'll take a look at REEF as well. So we'll take a look at REEF and we'll take a look at MATIC. So MATIC, man, I've looked at MATIC a long time. I hate that chart. Full disclosure. That is a weird chart. It is a very, very weird chart. It is all over the map. So I'm actually going to go to the weekly because I don't think it's done anything super significant in quite a while. Yeah, this is just such a bizarre chart. You know, the weekly might be too much. Let's go to the 3-day. So we're seeing some nice price action now. So yeah, for the longest time, like, yeah, this was like huge upthrusts and rejections, huge upthrust and rejection, capitulation almost here. This was probably what, March? Yeah, so this was coronavirus. Just a very, very volatile chart. But if we go over here, and we can see here at the original buyer's climax of this chart after the fresh listing on Binance, we've broken through resistance and we've tested. So we can actually zoom in on this line right here. Let's go to the 4 hour, see how it behaved. And you can see how it, you know, broke, it tried to break through the resistance here, tried to break through the resistance here. We got through, we tested, and we're now starting to mark up. So it's looking good. If we do get a move down, I think that that might be a good opportunity to get a position in here, but we're trending in the right direction, and I think the market is really bullish. So if that does not happen, I think that what you would want to do is, I mean, you could go into smaller time frames. It all depends on how you want to play this one. But yeah, because it hasn't quite gone away. It hasn't really taken off yet. So you could take a position. The thing is, with these smaller coins, trying to get a position when it's leaving support like that, 30%, just below the resistance, just below the support line. That is not much of a buffer. That's very hard to take a safe position inside of MATIC. You know, to get it below just these previous lows of the structure, we're looking at 40%. It's a stupid amount of risk that you were assuming. So you really want to buy a pullback with assets like this that are really, really volatile. You know, they move up and down quite a bit. Don't FOMO into green candles. Do not FOMO into green candles. If this is an asset that you believe in on the fundamental side and you really like what is going on the technical side, I think, you know, we need a little bit more confirmation to really get some positive movement. But I think if you really like this product and you want to get in at a good price, you need to wait for those red days. You got to get in when there's blood in the streets. So, and that's just because you got to, you know, it's such a volatile asset, you know, 50% down to the last low. That's nothing to mess around with. You don't want to be exposing yourself or your portfolio or any of your positions to that level of risk. So the candles that scare the crap out of you, those are the candles you have to buy. The really, really scary, nasty ones. That would be my recommendation anyways. So for those looking to get in on the newsletter, if you are on YouTube, check the description box below. I have left a link to the arcanebear.com. And in there, you might have to fish around a little bit, but it's got register or something like that. You don't have to pay for anything. It's a free newsletter. There's a lot of tabs on that site, but yeah, fish around for the free newsletter. It might even just be a pop-up, actually. But yeah, it's on that website somewhere. You just name an email and we'll get you on the list. REEF. REEF is a DeFi project, if I am not mistaken. So let's take a look at the technicals. So let's zoom out here onto the daily. Oh, it's fairly new, but decent structure, you know, quite a crazy launch, just an obscene launch. Poor bastards who bought that. Jesus. Yeah, you wouldn't want to buy the top of that. This is why you got to be very careful on launches. You just never know the outcome. I like to wait for price development. You know, I like to wait for structure to come in. You could draw an ascending channel on this. What's going on, Arcane Bear? Hey, Tio, I got a link for your newsletter, but I don't know the exact place. Is it a pop-up where people sign up to your newsletter, or do they have to click a link, or how do they get onto the newsletter? Because there's a couple people here who want to get onto that newsletter. I believe it's a pop-up, but yeah, in the description, arcanebear.com, and you should be able to find it to get signed up on that newsletter. So yeah, there is a little bit of an ascending channel. I guess we can go to some smaller time frames because this asset's pretty new. Yeah, ascending channel. You know, these are good. Like I mentioned earlier in the stream, these are good trading ranges to get into because you know when there's a break of structure. So right now, you know, not financial advice, but we're at the bottom of the channel. So bottom of the channel. If the trend continues, the next move is the top of the channel. And then if it continues, it goes back down to the bottom. What's nice about an ascending channel is if you get in, let's say here, let's say you took a position here, and it comes up and then it comes back down but breaks structure, you have an opportunity to almost exit the position at break even. You know, it's not always that clean, but when you are making higher highs and higher lows, typically your stop goes on the previous low or the previous low before that. So, you know, if structure did break inside of the channel, you do have a lot more of a safety net. You know, buying the descending channel, it's even worse. If you break structure in a descending channel, now you're eating some losses. But ascending channels, they're very gentle, friendly trading environments that are making higher highs and higher lows. Very bullish, very good price structure. So I do like those types of structures. So REEF from the technical side is looking pretty good. Let's just quickly go ahead and just do 5-minute fundamentals here on REEF. So I'll just go to CoinGecko here because I know nothing about it. Is it a DEX? What is it? Can somebody let me know? It's a pop-up. There you go. So yeah, go to arcanebear.com for the free newsletter. Just hang out there for a few minutes and you'll get a pop-up. It should come right away. That's how I thought I remembered it, but it's been a while. REEF Finance. So let's go to REEF Finance. Let's take a look at the website. DeFi made easy. Okay. Is there an app? What is it? Protocol aggregation, proprietary analytics, lots of buzzwords, multi-chain accessibility, powered by Polkadot. REEF is available on Binance. But what does it do? If you don't know what, launch a new token, but the problem with the launchpad, I think, or I'm speculating that there might be a problem this cycle with the launchpad, is when there's no friction to launch a coin, you get scammers and you get people trying to manipulate the system. You get websites full of buzzwords trying to trick the new investor. And, you know, you kind of get a bubble effect as a result of that. The last really big bubble that we saw was the 2017 ICO craze. There was just, you could just launch a token, do an ICO and get a ton of money. So when there, you know, friction can be a good thing too. Friction can hinder innovation, but friction can also hinder the scammer as well. So it's a two-way street. Just be aware of that. There is no available market cap information on this asset right now. Circulating supply is also unknown. It's relatively new, but the price structure looks decent. So, you know, do your own research, mitigate risk accordingly, and you do you. All right, we have time for one more here. What do we have in the chat here? 32 viewers, that's a record. Thank you all for joining into the stream here. Really appreciate you guys coming by. Easy, you know, you throw money at something and you either win or you lose. You don't need to join a technical analysis channel or really follow any sort of tips or advice, because when you're gambling, you're gambling. So that's one of the easiest ways to throw money around in this market, is you can just gamble it. And you know, the skill required to do that, it's pretty low, so it's quite achievable. All right, so there's not a lot coming into the chat here as far as requests. So dealer's choice. Let's take a look here. What do we got? What do we got? What do I want to take a look at? Oh, another one. This one is probably emotional for some people. A lot of people got burned on SXP, but SXP is looking good. It's kind of in a similar place as Flamingo. So we kind of have this, reaccumulation after decline structure. And, we have this bottoming pattern that has occurred inside of SXP. I feel a lot of people lost a lot of money on SXP. So, keep that in mind. People are not going to be happy. There's going to be a lot of bad mouthing and bad press to go along with the sentiment inside of SXP. But the charts don't lie, and I just look at the charts. And inside the charts, we have a nice rounded bottoming pattern. We have higher highs and higher lows. I think that, we're seeing some beautiful extensions and beautiful tests. And I really like the structure inside of SXP. And I think that there might be some bullish news. I don't know. I don't know what's going on the fundamental side with SXP. But for those who are unaware, it is a wallet / exchange / fiat on-ramp. And it's, it's just a wallet out there. So it's just another offering, another wallet that allows you to get your dirty fiat into the crypto system. Wise Crypto Investing says, I want to learn TA and gamble less. Yeah, investing in the space is really important. Invest in quality projects. If you want to throw some money at some hidden gems, feel free to do so, but realize that this is real-time venture capital. And, what comes along with that is huge risk. A lot of these coins go to zero. A lot of them go to zero. I don't believe that Bitcoin is going to zero anytime soon. I don't believe that Ethereum is going to zero anytime soon. Probably it's going to take a lot longer, if ever. It might just continue to develop and be a new form and take on, as the space develops, we fork the chain and it does something else. Like, we don't know if it's ever really going to go away. It's been around for so long now. But some of these more speculative ones, there's a huge amount of risk. So balance your portfolio appropriately. Make sure that, the majority of your portfolio is in the safer assets, and then reserve a speculative position. And, when we're on these market cap coins that don't, you're on coin market cap and it doesn't even tell you what it is. There's no market cap. There's no nothing. If you want to gamble on it, well, you're dealing with a portion of your portfolio that probably accounts for 1 or 2% of your entire portfolio. If you don't want to gamble, you have to limit your risk. So that is kind of the mentality that is not sexy, and it's a hard sell. Everybody wants me to come on here and say, here's the hidden gem. You want 1,000x your money tomorrow? This is what you buy. It's not about timing the market. There's this thing out there called survivor bias. And survivor bias is all the stories that you have heard about the Bitcoin millionaires. This guy, he bought $50 worth of Bitcoin way back in 2011. And now he's a multimillionaire. And this guy, he did this. And, this guy paid 10,000 Bitcoin for 2 pizzas and all this stuff. Those are the only stories you hear. What you don't hear is everybody that lost everything. People that lost their houses, people that lost their jobs, people you don't hear about those people. You only hear about the survivors and the winners, because those are the stories that you want to hear. This is a volatile environment, but it's a very innovative space that requires time, and it requires due diligence, and it requires effort. And I think that, getting involved in just being here, I think you have the potential to be successful. So don't blow away all your capital making high risk bets. It is not about timing in the market. It is about time in market. Time in market. Think in terms of decades. Don't think in terms of years. This is a space for investment. Are you going to rebalance your portfolio maybe once a year, once every 2 years, once every quarter? That's entirely up to you. But, if you think you can come in here one cycle and walk away a millionaire, I hate to be the one to break it to you, but I think you are going to be upset to find out that isn't usually the reality. It's a very innovative space. I think it's the best market to be in. There's so much potential. There's so much innovation. Cryptocurrency is opening doors that never even existed before. And I think that it's quite an exciting space, but you don't want to get burned, and you want to be here. And the easiest way to be here is to preserve your capital and make wise investment decisions. So make sure that a portion of your portfolio is quote unquote safe. And if you want to take on some more risk, that's entirely up to you. But the name of the game is time. You need to spend time educating yourself, educating how these markets work, how these market cycles work, and just distracting yourself from making stupid decisions, because it's volatile. Volatile means both ways, both down and up. So anyways, that is all the time I have for today. But if you enjoyed the content, please leave it a like. Don't forget to subscribe or follow if you're following me along on Twitch. And until next time, please, thank you guys so much for joining in here. And we will see you in the next video. Peace.